Cool. So now we're recording. So tell me a little bit more about your background, what you've been around, and
Yeah,
any questions you got, really.
yeah. I have started trading like 2013, but it's not really what it looks like. I was stuck. When you try to find the perfect combination of indicators and this stuff, I was stuck in this area.
Uh-huh.
Took me, yeah, it took me a big while till I realized that maybe I need a mentor. Maybe I need someone to teach me. It's like maybe it's just I need to stop watching the YouTube videos and the public articles and this stuff. So,
That's what I'm not gonna lie, that's what messes up a lot of people. People don't understand, but that is once you separate from all that and you just take time to focus on yourself and your journey. I
mhm,
I was in a couple mentorships probably like 4 or 5 years ago. I've been trading for a total of
mhm,
8 years. I started off with like dumb stuff, all these 50 different indicators on the chart and trying to figure it out. And so it,
mhm,
it took me about 8 years to really become like profitable consistently. And yeah,
mhm.
biggest piece of advice is don't look at like when I go on Instagram, when I go on any social media and I see any trading content, I click away from it as quick as possible because I know they don't know what they're talking about, right?
Yeah, yeah, I
Everyone's trying
agree.
to sell a course, everyone's trying to do something. This is why I do it for free because I want to show that I don't need it for money. I don't do it for whatever reasons. I actually started a challenge 2 days ago and I'm already halfway done with the challenge down here.
Mm,
I'm
mashallah.
in on this trade right now live, which is why it took me a while to hop on this call. I was checking out the markets and um,
Yeah. Yeah, actually, it's a pretty good one. I see a good momentum in the chart.
oh, it's
There is no,
phenomenal, bro.
wicked.
This has been so
Yeah,
clean.
it's
Like
it's really
I
good.
hopped onto it this morning and we were like up here and I'm like, okay, if on the hourly we get one nice push down, which we did, I'm gonna start jumping down to the 20 for entries. And then the indicator that I just recently released, I don't know if you've seen it or not. Um,
Yeah, I have seen the video. It's really great. I'm not sure if this is the way it works, but I like how
have you seen the new
release the
video that I put out
volume.
last night?
Yeah, 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 yeah. Actually, I saw it.
Yeah.
I like
So
how you made a relation between the account size, the volume, and the market
it's really
state. That
important,
that was
and that's
really great one.
people don't consider
Yeah.
that a lot of times. Like I used to have volume down here and then like an ATR. Now it's like over here, which is really awesome because first of all, it calculates the risk for you. So you just throw on your thing. You already know how much you're risking per trade. And it's just like so simple. I just hopped on the chart this morning. I saw it was green, saw there was a setup, and I just clicked buy on these number of contracts, and I'm in. Like I don't have to go to any website to calculate anything or anything like that. And then TradingView also does it for you. Like if you have 100 and
Ah, yeah, yeah, yeah.
I think I risked
You
like zero point
just
0.6 or zero
click
point
it.
0.5.
Yep, yep.
Um,
So yeah, actually, I like more that you trade like 20-minute and as your entry time frame. You're using the EVC, right? I think
it's a
you have a
little
combination.
different. I don't base my
Yeah,
understandings on other mentorships, if that makes sense.
yeah.
Because I've moved so far away from any other mentorship that I don't have names
Mhm.
for it, and I don't want to create names for it because it's just creating more fluff that people get caught up on. And so, if you want to use other concepts from other mentorships, it's really great. Um, I got started from other mentorships and then I figured it out myself, and I have a completely different understanding than how other
Mhm.
mentorships perceive it. Like, my trading models are going to be completely different from any other mentorship just because
Mhm.
you can show the same content to 50 different people, and 10 of those people are going to understand something completely different. And I guess I was just one of
Yeah,
those
exactly.
10
Yeah, yeah,
that
yeah. That's a very it's a very important part about learning something because if there is no real, I don't know how to say this, but if there is no real, I don't know how to say this in English, but when you try to do something applicable or something like this, it's as long as you are not putting this in on the chart. and there's someone that revises what you are saying or what you are doing, there will always be a misunderstanding in the concepts.
Right. And it can be good sometimes. I actually missed a really nice trade on this market as well. I was looking at it this morning, but I don't know if you saw there was news at 6:20 my time. And so I don't trade within an hour of red news, but this would have been a phenomenal entry as well. I actually had it marked out earlier. You can see all these entries I was looking at earlier on this one as well. Beautiful entry. But
Mhm.
once again, there was red news, so I didn't want to get involved. And look at how, this would have easily been a 10RR runner. And then just 2 days ago, I got another 10RR runner. So there's been lots of good market conditions. Hopefully, I know I'm gonna have to close my trade. I'm gonna close it probably at around 2 p.m. my time because the market closes in another 3 hours. So I'll close it at around this time, regardless of where it's at. But I'm hoping we get a nice little push up to around here. So it'll secure me hopefully a good amount.
Mhm.
But
Yeah.
yeah, as we were talking about that, I need to
So,
connect.
yeah. So, when I sent you a message to communicate with you, I told you that one of my real issues is that I can't really define a good market from a wiki or slow or bad markets. I'm sure that you might agree with me that any concept or any way of trading could be applicable as long as the market is good and clean. And as long as the market is very weak, wiki, or it's not really moving, any other trading strategy will almost guaranteed will fail. Do you agree with that?
Kind of. And I'll tell you why. So let me turn off the indicator here real quick and I'll go to a chart where I can show you it's not true. So I'm going to
Mhm.
cancel this order real quick. Cool. There we go. So I'm going to show you any Forex pair. We'll go with Euro USD because it's very common. And so I actually talked a little bit about this on one of my videos. And what I talked about is the entire idea behind what Forex is, because every market has different fundamentals and they're driven by different things. So if we look at a market like Euro USD, which has been, let me go take a peek at it right now, it's probably been one of the more profitable market conditions, like amazing trends. But
Yeah, lately it was really great, especially with the Bitcoin move, I think. Yeah,
yeah,
it was
Bitcoin. Oh my
really
goodness, let me
good.
show you this shit, dude. Let me show you our analysis on Bitcoin since
Yeah.
if you go back, I think it was 200 and something days to our original first few videos on the channel, I did a prediction on Bitcoin. And this is what my
Mhm.
prediction was. We're going to chop around, come back, build out some sort of baseline and take off to around 100,000. Look at what's been happening. Like,
I
I
see.
wish I could make this shit up, but it's in the old videos. Look at down here. This was back when I traded some sort of demand validation entries, which is
Yeah.
still what I do, but in a completely different context, just different entries. And like we caught this all the way up, and then it's just started chopping around. And I said, until we build some sort of baseline. And then somebody messaged me and they said, hey, should I buy Bitcoin now? It seems like it's about to take off. And I still have the messages saved where I said, don't buy it. It's going to fall for the next few days. And then it's going to provide a nice setup. And look at what happened. It just went and went and went. Um, I don't particularly trade Bitcoin right now or any sort of crypto, just given the regulations and the laws and stuff. So that's
Yeah.
why I'm kind of sticking like Forex too. Um, I haven't been messing around with Forex for a little bit just because of a few reasons, but I don't like the firms that are out there. The only one I use is Mep Funding, and I have like 5 accounts with them, but I don't trade them because it's just too much hassle
But
to.
yeah, why would you why would you hate certain market, for example?
Markets or prop firms.
No, markets, the market
Well,
itself.
first of all, if you go to like any currency pair, you're gonna have spread. That's the first thing. And then
Yeah.
on top of that, you have red news like every single day, bro. Every single day
Mhm.
there's red news. And then it, my indicator doesn't work on these pairs right now, and I'll show you why. I talked about it, but you have to divide this number of contracts to open by 100,000 and then it'll
Yeah,
be
by
accurate.
100,000
Just because of the contract sizing on Forex. So
future.
I'll be
Yeah.
fixing that here pretty soon. But no, Forex I moved away from for those few reasons. Not good prop firms with them, number one. And
Mhm.
then number two, you have spreads. And Yeah, spreads I think was the biggest thing. It's just you have all these different brokers that are setting their own prices, which can be a little shady to begin with. And so something I love about futures is it's all centralized. You're going to have the exact same price at every single access point, if that makes sense.
Mhm.
So
But there is no commissions and this stuff that could eat. I'm not gonna lie, I'm not so I don't really have a deep information about futures.
so
Just lately, I've
there's
I've
going to be commissions on
you know
both, but you're
yeah,
not going to have spreads on these markets if they're liquid, right? That you're not
yeah.
gonna like enter the market and be down $500. That's not how that works. Versus on Forex, you have each individual broker setting their own price,
Hmm.
which is gonna cause some problems. And then number two, as you scale an account, as you get to the $1 to $10 million account size, you are gonna
Hopefully.
be like, here, this indicator does it perfectly. If I go here on the 20-minute
Yeah.
and I set my account size to 1.5 mil at 0.8% risk, look,
Hmm.
these are your trading opportunities. Your money isn't going to be supported in this market and you're probably going to get slipped. And so if you decrease your risk to 0.5, which is a little bit more reasonable for a $5 million account, you get some more opportunities here and there. But all in all, markets with smaller here, I could probably jump to YM or NQ, which are a lot more liquid. And you can see now your $5 million or $15 million is supported within this market. You're guaranteed that you're not going to get effed up, trading this market condition.
Yeah.
So
Actually, I might say something that maybe you can take in the future, into consideration. I think when you reach certain amount of money, I'm not sure, you should just swap this to stocks. I'm not sure if this could suit you or not, but maybe you can, think about this in the future.
that's true. The reason I don't do stocks right now is regulations.
Hmm.
That would be my biggest reason.
Yeah,
And they have something for beginner traders. I don't want to get into stocks and then because it's
mhm.
impossible for you to trade stocks without a minimum balance of 25K. It's called the PDT rule. And you can only place 3 trades within a 5-day period. And so if you want to trade stocks, you can really only take 1 trade a week. And so I just don't want to dive into stocks and then people not be able to dive in with me. I want to do a market where we can all look at it together, and most of us are trading this market together.
Mhm.
But
I like
I will definitely be diving into stocks at some point in the future, with a personal
mhm.
account. It's just I'm doing fine with futures right now, so I don't want to like saturate myself and take on many more markets that I can't take on right now. I'm already like really busy with the kind of markets I'm looking at, and I don't want to throw more. And then on top of that, you have to learn the dynamic of every market you're in. For example, um, Forex, you have to go into my FX book and look for red news. On stocks, you have to look out for earnings, and you need to do a lot of testing. Like I've only done back tests on Forex, futures, metals, commodities, oil, gas, that kind of stuff. I've done like one back test on some stock, and they behave a little differently. You need to understand like market hours. You have to go up here, click on here, and see, oh, this market's going to close in 3 hours. Like all these little things, and then you have to learn how to calculate your risk. And if anything, I'd create like 2 versions of this indicator. Hang on. I
Mhm.
want to see if this
Actually,
indicator works with, yeah, this indicator actually works fine with stocks as well. And you can just
yeah.
see it turns green. You're in this market, bro. Like, let's go look for your entry. Your entry would have been not here. What time is this? 10:20. So I don't trade past 11 to 12 ish, but like this could have been an entry if you trade past that time. I personally don't do that, but then you can go to the green. This is all red, and the purple is just the trading view indicator. So
Mhm.
it's just for stock, so you don't have to worry about that. I think we can turn this off
Yeah,
somewhere.
actually. Mhm. So what are those other colors? I remember you said in the video that there is only green and red,
There you
but I
go.
see other colors.
Yeah, so that's just trading view throwing on the trading hours over my indicator, which gives
Ah,
it like different colors. I know it can be weird.
Got you, got you. So you didn't tell me how can how can I change the way I see the market from being a bad market to a very liquid, good market that I won't really get stocked out in
I'd say the
24/7.
biggest tip, bro, go get this indicator. And then I actually did this in the video. Do you remember what I did last night?
I have seen the whole video, but I don't really mean what you want to say. I don't
Yeah.
really
So I went through,
yeah.
I put on this indicator and I saw, okay, what market sessions were liquid? And I went through highlighting. I don't know if you remember this part. And I analyzed, okay, well, what's the difference between this price action right here and this price action right here? Well, you have your large candles, you have pushes away from the MAs. What happens here as soon as it turns red? The MAs are collapsing, candles are small, we're starting to fail models. I'm actually going to turn off the models because I don't use these. We're starting to fail down, breaking down price action. This isn't a market worth following. When does it turn green? As soon as we continue the trend, you take your very, very first entry over this high and it's going. And so what I ended up doing, just to kind of test myself, is I said, okay, I'm going to turn off this indicator. Oh, give me a second. I'm going to turn off the indicator to test myself, and I'm going to highlight all the zones that I think would be red. Well, look at this price action. There's no motion. It's failing back down. It's going to be red. Look at this motion. Started failing down. There's no motion. It's going to be red. Look at probably even from here to here, it's probably going to be red. Look at this price action from here to maybe around here, going to be red. From here to here, probably going to be red, maybe around to here. And then you turn it back on and you see how accurate you were. 1, 2, 3, 4, 5. I almost got all 5 zones perfectly. This one was shifted over just a little bit. There you go. But you do that enough times. Before I had this indicator, I would just do this on my own. I'd plot on volume and I'd see, okay, what time is the market moving? What time could it be marked green? And I'd do my own like calculations. I'd go on to TradingView. I'd see, okay, on average, I open 15 contracts. Then I'd go on different time frames and see, okay, during what time frames is my volume? I'm looking at volume down here. During what time frames is my volume within some certain threshold that's going to allow my money to be worth something in the market? And then I'd go back and look at the price action and I'd see, oh, during the times that they're liquid, of course they're going to move. So why don't I use that as my baseline? And so I would go back and backtest just the green sections, and then I'd backtest the red sections and see why it's very important to stay out of these sessions. And I talked about this yesterday, but no matter any entry you take in these reds, it's going to be a loss. Along here, it's going to be a loss. A sell here, it's going to be a loss. Along here, it's going to be a loss. Then you get into the green. You take your very first long over these highs, and it just runs. Once again, you take a long over this high, it's going to be a loss. You take a long over this high, it's a loss. You take a sell, maybe for some reason you're taking a sell, you win. But that's very dangerous because you're being rewarded for very bad behavior.
Yeah.
And then it turns green, you take your very first long and it just goes.
Is it fully when if I can do this practice you just said, should I only depend on the volume itself, or one of the ways that I define a good or bad one for markets is that how the price is moving and making those 10 and 20 MAs get away from each other. So I will be honest with you, it's not I have never used volume before, especially that I was only looking at Forex, where it's almost like the volume is almost around the same areas.
Not really, bro. Let's go take a look at the Euro USD and turn off the indicator. Let's go see the market condition here. Okay, if we look down here on the bottom left corner, you can see the volume as I move my mouse. You have periods where you only have 500 contracts per hour or per 20 minute. Then you move to like 2K, 1K, 5K. And then if I turn on my indicator, I have to open 160. Let me double check. It's either 160 or 16 lots worth of contracts. How do you think 160 contracts is going to look when you're trading with a volume of 2,000, of 1,000, of 500 sometimes? It's really going to mess you up. And so volume is super important. Like right now, our volume in the most recent candle, we're at 336 lots per 20-minute candle,
Yeah.
which actually just opened. So bad metric there. And let's go to the previous one, 2.5 thousand contracts. If you're opening up whatever this number is, 16 contracts, it looks like, for 150K investment, a risk of $1,200, you're going to get slipped pretty bad, because if there's only, you're making up a little over 1 to 2, maybe 3% of the market. And that's where I found a really fatal mistake of mine. I went onto this market, which was lean hogs. I think it was this one, lean cattle or something, or maybe this one. It was one of these markets. Yeah, I think it was this one. And you can see how it's all highlighted red. And I had taken an entry somewhere in here before I had the indicator, and I took some long over like some high or something. I don't remember where it was. And this indicator would have saved me, because it's telling me right now, look at the volume on the bottom left corner. I opened up 15 contracts, and then this 20-minute span, which is a big candle, we had only 23 contracts within this. This is Ethereum futures, but you get the idea.
Yeah.
There's 20 contracts. I'm entering with 15. What do you think is going to happen to me, right? It's going to gap up,
Yeah,
and then that's on me. So volume is very, very important, especially once you start to scale your account, because if you want to enter with a $1.5 million account and there's only 33 contracts and traded in the last 20 minutes, and you have a $1.5 million account with a $12,000 trade, you're going to have to open 11 contracts. And if there's only 41 contracts in the last 20 minutes, you're carrying the entire market. So notice that as I changed this from 1.5 million to 150,000 with 0.8% risk, there we go, it turns green. And if I'm risking even less, 0.6, it turns even more green, because it's allowing me more opportunity. But personally, I wouldn't trade this market. It looks pretty bad.
Yeah, I got this point. So actually, I have watched many of your videos on YouTube, and I have seen you many times like doing one thing that I couldn't really understand what is behind it. You was watching like you was literally doing this 1 hour clean, 4 hour clean,
Oh yeah.
20 minute. Yeah, and this was really, really fast, and I couldn't really understand what you are doing around these time frames.
Yeah, that's actually a really good question, because you said that you look at not only, the MAs, but you look at how price is delivering. And that's what I'm doing when that happens. When I jump down or jump up, and that's why I included the watermark up here. I'm going to make it a little bigger for you to see.
Yeah.
We'll make it large.
Mhm.
And then we'll throw, I don't know why it changed, but Elite Trading Network. Okay. So what I'm doing effectively, I'm going to turn off the indicator just so it doesn't confuse us. Although I kind of need it. I'm going to turn off the background. I'm going to find a different way to display this background, because it is kind of annoying. So what I'm doing effectively is I'm jumping between every single time frame, and I'm looking at the market condition within this time frame. I look at the 4 hour, and I'm seeing, how is price delivering? Is it wiki? No. During this time, if we started our first push down, that's where I want to get involved. Then I jump down to the hour. That's all I'm doing. I'm looking at where we are in perspective to this larger move. Do we have potential to continue moving? Now, it's going to change, because on the 4 hour and the daily, my analysis is this high. Like, let me step up to the daily to show you. My analysis is that long term, we're going to hit this high. But I know that my entry on the 5 minute isn't going to respect this. So I jump down to the 4 hour. I see, where are we on the 4 hour? 4 hour, we're currently in a short-term trend, right?
Exactly.
Then I jump down to the hourly, and I just say, oh, it's clean. Like, there's no chop. There's a clean trend. I want to get in on this. Then I jump down to the hourly. What's the hourly doing? Clean trend, moving from the MAs. I say it's clean. Like, I'm not doing anything special. It just comes with a lot of experience. If I would have gotten on this market at this market condition, I would have said no, and that's it. Like, you can just clearly see there's no money in this market. And I can tell you right now, if I've jumped down to the 20 minute and I look at this price action, what color do you think this is going to be?
Red.
Yeah. And that's all I'm doing. There you go. But I do all these things, like when I jump between time frames and say it's green, it's red, whatever, or clean or not clean, that's what I'm doing. I'm looking at how price is delivering and saying, is this something that I want to look at? Now, this particular indicator that I developed is only for the 20-minute validation time frame, because I'm jumping between like the 4-hour, the hourly, and it's just so much to look at that I just want to look at the 20-minute briefly and know, okay, is it in line? And another thing I can do is I can overlay these indicators. I can have one on the 4-hour, hourly, 20-minute, and the daily or the 4-hour, and I can say or ask myself, how do they fall in line? If they all agree with each other, then I can take along. If they don't, I'm not in this market. So that's something I might want to look to do in the future. Might get tapped out here, which is perfectly okay. I'm at break even right now, so not bad, not bad.
So based on what you have just said, is it right my assumption that you are using, the candles, how clean they are, and for entry itself, you're also using the candle. You need to see a candle with a momentum.
Yes. That's actually super important. For example, let me show you an example. I would not trade any of this. Who cares if it's green? There's no way in hell I'm getting into this market. This was probably red news. Usually there's red news at 6:20. Yeah, this was red news. And so my general rule of thumb to avoid all this is I just wait 1 hour after red news. So on this candle, I'd start looking at the market again. I'd get this giant wick and say, no, I'm stepping away for another 2 hours. And I step away for 2 hours, comes on. This is going to be my first entry or over these highs. These two are both valid entries. Why? I mean, we've displaced so far away from whatever the hell this price action was. And this is, it's a fractal Wyckoff accumulation. If you step down to the 5-minute in here, you're going to see the chop. You're going to see the weak to strong hand transfer for institutions buying up all the positions. And so what this chop is doing, if you look at the giant wicks on both direction, is we're engineering liquidity, if you want to call it that. What we're doing is right here on these highs and these lows, there's a ton of stop losses and entry buy stops. And what's happening is somebody is taking a sell right now. Somebody got tapped in for the sell and they're looking for the market to sell. Okay, so we got this down. A lot of stop orders, so stop losses from people that enter here and put their stop losses here. So there's a lot of stop losses here under these lows, and then there's a lot of entry buy stops to continue the market short. So effectively what they're doing, or institutions or somebody that knows something, is now they're chopping back and forth because they know there's a shit ton of buy stops here too. There's people that want to take this market long. And these people that want to take the market short that just got tapped in have their stop losses up here. So then they get tapped out. Institutions are repeatedly buying up all these positions, and look at what happens. And that's why I choose to stay out of market conditions like these.
When I saw that one you just drawn, the first two things that popped in my head is that the first one is below MAs, where price is choppy while the overall is moving to the upside in your case. So based on that, you can just remove this. Besides, of course, the wicks and this stuff you just said. Is this the same way you have seen this trade?
I've taken trades like these. Is that what you're asking?
Yeah, kind of.
Yeah, this is a valid trade. I mean, I'd have to replay it and see what it looks like here. But we can go back and I can do a real quick top down. We can look at the 4-hour.
Yeah.
4-hour, there's nothing to do. Notice what's going on. Lots of chop. I don't want to get involved on this market, period. Like, I'm not going to take a trade in here. The market is indecisive. We're just in this giant range. And that's the way I define it, through ranges. I look at the range and I say, nope, we're not moving. Versus down here, this is what I want to be trading in. So I just say no and I walk away. Okay? Then I step down to that.
Yeah. Could you please? Yeah. So when is the exact moment you said, yeah, we are inside a big range that is not moving anywhere?
If we make a strong push in an attempt to break out of a zone, and then we fail back down, back into, like, you can look at this like this. If we break out of a range and come back into it and fail to push above it, that to me is saying institutions are not ready to buy up positions within this range. You can, however you want to put it, you can say that price or the asset is overpriced, and institutions want to price to drop to around here before they buy up even further. And so in that case, you don't know what price is going to do. In my more recent videos, I call this a no trade zone. And this is literally where I look at the market and walk away because I don't know if it's going to do this, I don't know if it's going to do that, or it's going to chop. Same thing with Bitcoin analysis that I did a long time ago. I said, I don't know how this is going to play out while we're in here. It might go up, it might go down first, or it might go down and then I don't care. I'm just not trading it because it's going to take away from my edge. And so as soon
So you
as we
define this
like,
demand zone,
huh?
right? You define this demand zone,
You can
and
look
when
at,
you saw price coming back.
yeah, so this can be seen as a larger institutional demand zone given that we're on the 4 hour. And notice how price failed to, shoot up and in fact just fell down. Generally, if you
Yeah.
go back to my Bitcoin trade, you can see it tap and then immediate reaction from it. This, we got a little bit of strength. You might have some buy stops somewhere around these highs, and then it fell back down. We can jump down to a 20-minute. And look, there's nothing to do here. Choppy, I wouldn't, I'd hop on this market, see this giant candle, and then I'd say, okay, we'll give it a couple minutes. This happens, and then I'm just not looking at the market. It's too choppy. Now, if we would have gotten some sort of push like this, then yeah, I'd be in longs again. But given that the
Yeah.
hourly is failing, like you can just see the hourly time frame, it's not
Yeah,
something I'd want to be doing. And so now, as I jump up to a 4 hour, I see this isn't a market I want to trade. Okay. So then what I would do is probably jump down to the hourly 20-minute, 5-minute to see what's actually going on here. And notice what we're putting in now. Bearish structure. We're starting to break down. Bush, reaccumulation, if you want to call it that, because we're breaking highs to continue breaking lows, and that's what's going on. So now I'd wait for the market to push down, given that we have a lower time frame bearish trend. Look at the 4 hour. Now the 4 hour is valid for sells, because on the hourly, look at what we just proved. Now we have a bearish trend on the hourly. Bearish, bearish, bearish. And then we have continuation sells right here. Now, a lot of people would have thought, oh, this is a bullish break up. Let's follow the trend up. But that's not what was happening. You have to look at from left to right, the overall picture. We started breaking down from this point right here, this low, once we broke. Because if you want to look at it as ranges, this would be your final range, because the body break was from this point, and if we follow that down, it came to this low. And so we broke down, we broke down, we broke down, we broke up once. What is that telling you? The next breakdown isn't to push up, it's to continue down. And so what happens is now we're in a green session. Actually, no, this is about to turn red. It's about to be market close. So I'd wait for the market to close, wait for green again. So this entire time I'm just waiting. Step up to the 4 hour. Now we're on the 4 hour hourly. Okay, this is looking phenomenal, 20-minute. Now we had news this morning, so I wasn't able to capitalize on these entries. So I gave it a few candles. I gave it like an hour. Then we get a very, very nice strong push coming from clean price action. I wait for it to stabilize. Buy stop is set over that high. I step down to the 5-minute or whatever entry time frame you are. I look at how much I'm risking and I set my position, and you just let it play out. And there you go. Now I'm probably going to take a break even on this trade, but in case I don't, we could have some giant random candle that pushes me that high. I close there and life is good.
Yeah, actually, yeah, I like how you use the ranges to define whether it's clean or not.
It's
I used
really
to do
awesome
something like this.
because
Yeah, but
this
it's not
entire time,
the
while
same
all these
feelings.
people are trying to predict what direction the market is going to go in, I just wait. And by waiting, like if we try to go into this price action in here and we try to predict what's actually going on, our overall trend is up, but our lower time trend is down. So down, 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 up, down. And it's like we're trying to find longs in this market, but the market is just breaking down. So I just choose to stay out. You have models that aren't lining up, you have different stories that are being told. It's not something that I want to guess on. It's gambling at that point because you don't have an edge defined on market conditions like these. You have an edge defined on trending market conditions like these. And that's why it was red. Like red, probably don't trade any of this.
Yeah, could you please give me, I know this would be a very weird question, but could you give me an example of how this range rule you just created can make you stay away from bad markets? I want you to give me an example of a bad market, not a good one.
Okay. I mean,
Maybe,
this was a bad market that turned into a good one. But yeah,
but it has turned to a good one, right? So, yeah, could you give me one more example, please? I
So,
know it's kind of weird. I know people ask for the good one, not the bad one.
yeah, no, that I always ask for bad ones. That's how I learned. Show me the markets you
Yeah,
don't want me
actually,
to trade.
one of the one of the things that made me, like the way you're teaching or explaining your trades is that, you go in details about why this, why that, that
Hmm.
one has, one of the things that encouraged me to call you.
Yeah, a lot of people go on YouTube to find it's just bullshit, really. They go
Yeah,
and
no
look up
details,
some. It's
no
such
details.
bullshit,
No.
and that's why I chose to make it free. I'm showing people I'm not selling shit. I'm just doing this because I want to waste time, and I'm always on the markets. Like you can see, I'm up 1 grand right now, and I'm just like teaching people. That's my thing.
No, actually, I started you more as a person, not just a trader. I think you're trying to,
I just like having a
some,
community, people to talk
uh,
to. Um,
yeah. It's now it's very lonely journey. I
oh,
have been
brother,
trading.
tell me about
Yeah.
it. I'd be in my basement for 18 hours every day back testing. I have over I'm going on to for almost 200,000 collected trades within this year alone. I was at 150 last, 150,000 trades. So I understand.
Yeah, it's like,
So on the call, it shows we only have 2 minutes remaining, just because I don't have Zoom Premium. And so if you want, we can
mhm.
take a quick 5 minute break and then I can send you a new link and we can finish this up.
Yeah, sure.
So, real quick, you were asking for a bad market condition, is that right?
Yep,
Okay,
exactly.
so I'm going to show you a bad market condition and then the transition to a good market condition and at what point I'd start looking at it. So I'm going to jump back
Yeah.
here to the worst market condition ever. We can jump up to the 4 hour. We'll do that. What's going on here on the 4 hour? Wait for the, I'm going to turn on this, but
The
turn off the lines just so we can see price
mhm.
a lot clearer. So what's going on in this market? The
I see
very very
everything.
first thing that comes into mind is why the hell was our giant bearish candle here and then bought back up and then we switched directions. We're breaking structure, breaking down. So in this point, I don't know what the overall trend is because we're going up and then we're going down very heavily. Like what's going on here? So I jump up to the daily to get a better idea of what this market condition is doing. And on the daily, this tells me everything I need to know because now we can look at the daily trend and we can see, oh, we're pushing higher, came in for a reaccumulation push, pushed higher, way above these highs and these lows over here, pushed higher, pushed higher, pushed higher. What did we just do? We just broke structure down, absorbing the zone is the term I use because we didn't officially break it. Because if I step up to a weekly, I'm going to show you this real quick. If I step up to a weekly, more likely than not, these candles right here are just going to be wicks or like a 3 day.
Mhm.
Nope, a weekly. There you go. It didn't break. It's just a wick and then it pushed up higher. So then I stepped down to the daily again and I'm like, okay, all I know is that at some point in this market, we're going to get a reversal targeting these highs. And that's all I'm doing. Okay. So now I step down to the 4 hour. As I'm stepping down to the 4 hour, I know that my target at some point is going to be this high. But then I look at this price action. Oh no. All right. Anyhow, guys, I will resume here in a second. I need to pause the recording and then I will get back to you. Cool, man. Well, we're left off at one of the most important parts, but real
Yeah.
quick, let me go check how my trade is doing on my phone just so I don't have to mess up the replay thing on here.
Yeah, sure.
That's still kind of where it used to be. Probably going to take a break even on this trade, but that is a-okay.
Mhm.
Okay, so
So, before you start explaining, is it fine if I can record this one?
yeah,
That
I'm recording, by the way, so I'm going to post this on YouTube as soon as we're done. So if you want, it's already being recorded.
Yeah, just if there is anything that could be personal or something like this, just you can edit it, please. Other than that, it's fully fine.
Absolutely. Yeah, you're all good.
Yeah, sure.
Alrighty. So we doing well?
Yeah,
There you go. I
let's
approved.
go. Yeah, so the question was about how to define a good market that is not stuck inside a range
Right.
or
So
a weekly.
we're going to start off by looking at a bad market condition and then seeing at what point does it become a good market condition. That's how I like to do things because it teaches you for the whole patience aspect of trading, which is just sit out until it's ready to move.
Mhm.
Okay. So cool. All right. Looking at the daily, we kind of already said, okay, we're in this bearish kind of push down, but our main target, I'll highlight this up here. I'll throw some text. We'll just label it our target. Okay. So this is what we're targeting on the higher time frame, but we need to see what's going on the lower. So we step down to the 4-hour, and the very, very first thing that jumps to my eyes are the actual delivery of this. Wicks, wicks, giant wicks, giant wicks, giant wicks. This is telling me you probably don't want to touch this market for a little bit. It's very indecisive. There's a lot of back and forth going on, probably some sort of fractal reaccumulation. And then what we're going to do is jump down to the hourly and see with a little bit more detail what's actually going on here. If we pay attention to the most recent price action, we were breaking down, failed to break lower, broke higher, broke lower, and now we're just kind of like in this back and forth. The same thing that's happening on the 4-hour and the daily. On the daily, we broke down and then we kind of like started to push up, but we're still within like some weird range where if we jump up to the 4-hour, this is going to be a wick. So it's the same thing fractally that's going on the higher time frame. So once again, this is leading me to believe I probably don't want to touch this market. We don't have any strong direction. If anything, I jump up to the 4-hour and I see where we are in the market. This is what I would classify as a no trade zone. And I don't know if you've seen how many videos you've seen, but I actually talk about this concept quite a bit, where if we don't lift up from this point forward and we make another push down, likely we're going to continue the push down very heavily. Once again, here's another example. We have this low right here that we defined. And if we don't push up from this point, I already know that if we make one strong push, we're going to continue the downtrend, because this is telling us that we tried to make a push up, institutions tried to buy up, or somebody tried to buy up, it failed, and now we're down, right? And so a lot of buying and selling is occurring at these points, like an infinite amount. We can't calculate how much. I mean, I guess we could if you have the order book, but there's so many orders placed here, orders placed here. Like you need to think about this market as if it's like liquid. And what you think about it, you can think about infinite number of orders at every tick. You can think about it that way. So at every point, there's a shit ton of orders, but you're going to have a spike of orders at these points right here, a lot of orders, and you're going to have a lot of orders at these highs. And so one thing I actually used to trade with was the volume profile. This was years and years ago, and we can throw it on here for you. Volume or you might go into technicals and then you go into profile, and then you can go into the we could do like the fixed, and then we can define it as like from here to here. And you're going to see there's very high nodes around these lows and around these highs. Like this is like fundamentals to volume theory. Oh, sorry. I meant to draw horizontal lines, but you get the point. Or even better, if we were to do a volume range of the entire profile, you're going to see high nodes. We can actually increase the number of nodes here. So we'll do row size, we'll do like 240, just so we get a lot more precision. There we go. Okay. We get a lot more precise data, and you're going to see a high volume spike at these lows and a high volume spike. Oh, my bad. Horizontal line. Large volume spike at these nodes right to around here, and then a large volume spike right to around these highs, and then a giant volume spike right here. So what this is telling you is just how much volume is trading within the market at certain ranges or price exact. And so what this is telling me is if we jump up to the 4-hour, this is the 4-hour, the daily, my bad. Give it a second to load. Okay, we'll just get rid of that, but you get the general idea. We jump down to the 4-hour, we see a lot of volume here, a lot of volume here. We're not trending, we're above the MA on a larger short-term time frame bearish trend. So we can agree this trend right now on the 4-hour is bearish. We can see it. Yeah. And our anticipation is this low, but our higher time frame is telling us we're targeting this high. And so when those things start to clash, I just don't like to touch the market, because one time frame is telling you one thing, another time frame is telling you another thing. And so I wait for confirmation. This is why I call this a no trade zone. I do not get entered in anything like this. And so what I would do is now I'm just waiting. I'm waiting until we break out of this range, because if you want to look at this as the defined range, we push down from this high to this low. We pushed high, but not high enough. You can see the lack of money that came into it. This is actually a really good indicator for me, is looking at the actual wicks. We pushed up, made a giant wick, and then immediately shoved back down. That's telling me there's a lot of selling in control right now. They don't want the market to go up right now. Sorry about that. Can you still see my screen?
Yeah, I see it.
Cool. So what this is telling me is we're just going to wait. The daily is telling me one thing, the 4 hours is telling me another thing. I'm going to jump down to the hourly and wait for something to confirm, whether it sells or buys. And I'm just going to give this market time. But as of right now, the only analysis I know is that if we push away from this low right here a little stronger, we are very, very likely going to continue this uptrend. That's all I know. And that's taught from experience. Like right here, if we would have pushed a little bit higher to around here, that would have continued our uptrend. Once again, from here, if we would have pushed a little higher to around even right here, I would have started looking for longs again. So I'm either waiting for very strong bearishness to come in right now or very strong bullishness to push this up to around right here. And that's it. I'm not touching the market until I just set an alert there and let it go, right? So now I jumped onto the hourly and I'm just monitoring this market. I want to see what condition we're in. At this point, you might want to turn on your liquidity zone indicator to see if it's okay to put money into it. Right now, we're in red. It's telling you now. So let me close this. And what I'll do is I'll just play forward until something good happens. Oh, we're getting a little bit of bullishness on the hourly. But if we step back up to the 4 hour, if you look at what has happened the last few times we try to push up, it pushes back down, pushes back down, pushes back down, pushes back down. So my anticipation is that this push up right now is going to be just another push down. So I'm still not doing anything. I'm going to wait till it shows me that there's money in this market. So I step down to the hourly again, and there's still nothing to do, even though we got a lot of bullish action just now. And you can just see the accumulation if you study Wyckoff models, down, up, down. If you want to look at like fractal structure, you can look at this as that, or you can look at this as that. And we're waiting for either one of these highs to break. And that's all I'm doing. So now I'm still on the hourly. I'm going to wait for hourly to begin pushing up a little bit higher. We get another push on that hourly. Okay, that's showing a lot more promising data. And look at this. This is the first time that we've broken the MAs and pushed far beyond them, right? And then on top of that, price is currently green right now. So we're good for a long. Okay, so we went from a very, very bad condition where the daily wasn't aligned with the 4 hour, and now the 4 hour has shifted and started putting in demand. This right here, this candle itself right now is demand validation for me. This is telling me, okay, you're good to start looking for longs now because we pushed away from it. I'm not waiting for price to come back into the zone. If anything, I'd much rather price just explode because it shows a lot more momentum than price coming back down. And if price comes back down, more likely than not, it's actually to break down. Because once a trend is established, you never want to see a retracement down deep into those areas because more likely than not, it's for the zone to fail.
Yeah.
And a lot of people draw their demand zones and they're selling at this high, waiting for price to come back in, and then they want to like buy from here, and then like it just doesn't make any logical sense for me. So what I'm doing is right now on the 4 hour, we just had a shift up. On the daily, I don't care about daily so much. Notice how daily MAs are like under, they're kind of like just failing. My anticipation is I'm not looking at MAs on the daily, I'm looking at my target. Okay, so jump back down to the 4 hour, getting nice longs, jump down to the hourly, getting very nice longs right here. And so what I'm going to do now is once demand has been validated, notice the high I drew out earlier, we're starting to potentially mess around with that. And that's giving me indications to, okay, let's start looking for potential longs here. So now what I do is I jump down to the 20 minute and I'm waiting for my confirmation. There's nothing here. I'm not trading any of this. I'm not trading this high. I'm not trading this high. I'm just waiting. Okay, price comes back down. I'm waiting for something valid to trade. Boom. You get your first setup right here at 10, whatever. We're in the green. If you look at the indicator down here, it's telling me we're good. You'd open up, how many contracts? 3 contracts. And that's how much you're risking. So if we go into the 4 hour again, I'm gonna step up to the 4 hour and see where we are again. Notice how we made a very strong push. Now we're starting to shift. Step up to the hourly. Notice this immense strength that came into this market. Notice the 20 minute getting a potential valid long over this high. Now, this is what I call the anticipatory buy stop, because if we're looking at the middle MA, which is the one I use most, notice how we're not even close to it. Like we're pretty far away from this candle. we're 0.1% away, or 41 units of price, in this case, ticks or points. We're 41 points away from this market. And so this shorter, faster moving MA is telling me that if price were to, I actually have an indicator for this. I might be able to show you. I have this indicator that I got coded for myself. It's not public or anything. It's called the next candle prediction. And so what this is doing is it's predicting that if, I'll change the color of MA here real quick. We'll make it like a bright pink or something so you can differentiate. If the candle were to move this much, the middle MA, which is the one I use most, would become a validated buy stop. So it's predicting how far this next
Yeah.
candle is going to move. And this was built with AI. So it has some predictionary models built into it. And it's saying, if we were to move this much, this is what the MA would look like. And so this is telling me this is a valid anticipatory validation candle, where right now it's not valid. But if we were to push this high, it is valid. And the reason I created this is because when you're on the live market and you're looking at this candle, you want to know how far the price has to move for this to become a valid buy stop. Because it's very easy to go hindsight and say, oh no, I definitely would have traded this, but that's after the MAs have played out. And so what this does is it takes care of showing what the MA is going to look like under a given market condition. So I know right now with my indicator that if we push up this much, this hindsight would have been a very, very nice long. So now what I'm going to do is I'll turn this off because I use my imagination, and I know with the shorter moving MA, this is a valid buy stop, because the shorter moving MA is going to stick a lot more rigidly to price than like this longer term one. And so this gets me into faster trending markets. So I step up to the 4 hour again. I'm going to do another quick top down. As I look into the 4 hour, it's the first time we've broken and closed above the MAs. No other time have we done that. We have this low that I talked about earlier, that if we manage to break it and push down a little further, then we're going to continue the downtrend, but that hasn't happened. Then we have the daily that's telling us this market condition in the long run wants to gravitate towards this high. So let me check how my trade's doing. We're probably going to take break even here. Okay, we're still in it. So 4 hour. Now we're just looking for a long. Hourly, immense strength came into this market. It's clean. It's not choppy. This is bad market condition, and it's reflected in the red indicator. Like you can just see it's red. The moment it turns green, you're good for a long. The moment it turns green, you're good for an entry, right? Look at the moves versus these. So now I jumped down to a 20 minute. I have my entry buy stop, which I just confirmed it's valid. So I jumped down to the 5 minute. I see, okay, we're still green. I'm going to set up my buy stop right over this high. My low is right here, 38.67. So I just do like a one ATR stop. So something like this, and that's my entry. Kind of like I did today. Okay, so now what I'll do is I'll play one candle forward. Okay, we fall down, and this is amazing. I love it when my entries fall back down and then build back up. Although it just turned red, so you might want to cancel your order right now. I wouldn't be entering on this, right? Now you might. I'm not going to trade this. Oh, it just turned green. So the moment it turned green, you see, that was a valid entry. You take your -1 or whatever. Now I step back up to the 4 hour and see where we're at. We're pushing. We want to take out this high. So I jump down to the hourly again and scalp for another entry. 20 minute, you're going to wait for money to come into this market. We're starting to fail back down again. And it's this whole fractal idea of we're chopping right now. On a higher time frame, we're chopping. This is what this market looks like on a higher time frame. And so what I'm waiting is for a nice stabilization baseline, kind of like with Bitcoin, and then we go. And that's what I'm waiting for right now. I'm waiting for a strong baseline sideways, and then we go. So now I'm going to wait. Cool. You get your baseline. Hopefully it doesn't fall down. It does fall down a little bit. This could be a valid buy stop, but I'm going to wait for the next candle. Nope. Not taking anything. Going to wait for another strong candle. Falls down. That's okay. We're getting this baseline that I was telling you about. And then come around 1300. I'm not going to take this because I know my market hours are about to close. The market's about to close. So I'm not going to take this entry. You can choose to take it if you want, but there's a couple things at play here. If you look at all the previous candles, look at the chop, look at the wickiness, I do not take the first strength candle out of a market condition like this. I wait for valid entry. And so what I'm telling you right now is about to happen, and I haven't seen this price action before, is we're going to get a push up, we're going to get tapped in, and then we're going to get a giant rejection. Let's see if that happens. Maybe not, maybe it just goes, and that's okay. We get tapped in, it turns red. So of course I knew not to trade that. Now this is market close, so you would never be trading a market condition like this. So we'll step back up to the 4 hour. 4 hour has pushed immensely strong. Hourly as well. So 20 minute, I'm still waiting for my longs, but the indicator is red. The indicator or the indicator is telling us for the next few hours, we're just going to drizzle down and potentially set up a new entry for our next session. Okay, it just turned green. What time is it? After market reopen. So this could be a potential buy stop. If I go into my indicator and I throw on my prediction, and I have to set up my proper MA color. Where is it? Well, that doesn't help. There we go. I want to see what the red would look like. This is not a valid entry for me. So I'd just be staying out, wait for the market to go without you. That's okay. You get another potential entry. Now we're going to turn this back on and we see it's still a valid entry. This wasn't a valid entry, by the way. It turned red. 4 hour. We're immensely strong. Hourly, immensely strong. 20 minute. You have your buy stop right over this high, which is valid. We just confirmed that MAs are rubbing up against it, and our anticipatory prediction candle is telling us if we were to move this much, it's going to become a valid buy stop. So you take your entry, whatever that might be, with an ATR of, what is that, 45? That's your ATR right there. Jump down to the 5 minute. It just turned green. It's 1920. So it's during an okay liquid time of the market. I don't trade these times, so this wouldn't be another entry I take. Okay, you get tapped in. Probably take a loss here. Nope. And it goes. Turns green and red. So this is a very indecisive market condition. I do not trade past market close until the next market session. But if you want to trade that way, sure. You're at break even right now. So I just stay at break even. Cool. Take your break even. Actually, that doesn't constitute break even. Price has to cross the break even threshold. But some people might be break even on this. I'd still be in on it. Still at break even. It's red. Notice how I'm still in my position even when it turns red, right?
Mm-hmm.
Goes. It turns green for a second. Oh, no. Yeah. So this is Asia session. If we jump back up to the 20 minute, we're going to see if this looks like yeah. Oh, this is beautiful. Then you get another entry here on the 20 minute, either over this high or this high. Both of them are valid, because notice that the first strength candle from this initial push right here came from this candle, believe it or not, attributed to this giant push. And then finally you get your entry on like the fourth strength validation candle or the fifth, however you might want to. Everyone has their own, technique or whatever. So you get another entry buy stop right over this high. You're going to set up your long right over this high, ATR low, we can say 0.56. There you go. And that's your second entry. Still at break even on both. And then you just manage accordingly. Like this one, I would manage 70% of my position to this low, a little bit lower. And that's like 8 RR. And then you're waiting for the second one to manage, which you're still at break even. Okay. Second one, you'd probably manage 70% here. And then this one, I'd manage 70% to this low, up 11 R. And then it just kind of goes.
Mm-hmm.
And
So,
yeah.
Mm-hmm. For the baseline, when you explained it, I couldn't really understand what you mean with baseline.
So down, where was it
Yeah.
at? Down here, where I was waiting for the sideways action.
Yeah.
Right
So
here.
what do you mean by baseline? I couldn't really understand.
Baseline is simply a way to say price is going to go sideways for a little bit. Notice how this is our base and we're following this line. That's kind of why I call it a baseline, because we're building a base and we're trading within this. And what's happening within this box right here is a lot of institutional accumulation. So this small chop, I'm going to replay, and if we were to look inside of this small chop on the 5 minute or even like 3 minute, we'll jump down to the 3 minute. What's going on here? There's a lot of chop on the 3 minute. Chop, until we break this baseline, these lines, and then you're valid for long. And what this baseline is telling me is that a lot of people, look at how much selling there was here. We're talking billions of dollars that were sold at this point in the market within these few minutes. Millions, probably. So
So for entry, it's not just a momentum candle. You need to see a momentum candle with a baseline.
sometimes, because when you have a very, very fast moving market, you're not going to get those baselines. Like
Yeah,
when you have if I play forward again, this is a valid entry here, but you didn't get a baseline, did you? If you want to
maybe
consider
it's not
this your
important.
baseline, yeah,
Yeah,
then we broke out of
more.
it and that's your entry. But a lot of times, here's the second entry I took. I guess you could consider this a baseline. I don't. Baselines are a lot like longer and deeper retracements. Notice how on this baseline we broke down below the low of the candle and then traded underneath it for a while. On this one, we didn't even break below anything and we just traded right straight through it. So I guess it's how you define it.
Yeah. Mm-hmm.
But yeah, it comes down to personal preference and testing, a lot of testing to know what you like to see in a market condition. Because I'll trade both of these, but there's very, very specific variables that I pay attention to. And so notice that we went from a very, very nasty price delivery, which was this, to a nice and trending market condition. Like look at this giant box that I drew versus this giant box that I drew. You can see the giant difference. And this, if you want to classify in like 2 sentences what a nice market condition is this box switches from horizontal to vertical, and that's it. And you can draw these out on your own. And what you can go do is draw these out. Okay, so what was happening here? It went from vertical to horizontal, and that's it. And then guess what didn't happen? We didn't turn vertical again. We stayed horizontally. And if anything, we turned bearish. And then you can just see how nasty this price action is. Back and forth wicks everywhere.
So can we say that this is due to the, because it's not aligning with the daily, or it was just a coincidence that you just looked at the daily at that time and it wasn't
It's
really with.
definitely a conclusion you can draw. It's a conclusion I actually have drawn because I've tested this quite a bit. And what you'll notice is when market deliveries like these don't line up on your higher time frame, the market delivery on the opposite trend, or you can call it counter trend trading, is very, very bad on sometimes. Like this is very bad price action. Breaks up, breaks down, breaks down, breaks up, breaks down, breaks up, breaks down, breaks up, breaks down, breaks up, breaks down. Like this is very, very clear accumulation to some extent. Starting from around this point, we break up, we break down, we break up, we break down, up, down, up, down, up. This is very, very clean accumulation. Versus if you were to draw, where's my tool? There it is. This.
Yeah, exactly.
You can just see it so clearly. Accumulation. And this is going to be like continued accumulation or fractal reaccumulations because they're not real reaccumulations. No lows were broken within this thrust up. And so once you start to look at the market like this, you know that you don't want to be trading during these points, during these points, during these points, during these points, during these points. Probably not during these points because what's our target? This high. Look at what ended up happening. We built up to this high. When would you start looking at this market? During these pushes up, these pushes up. Because if I draw my boxes again, all in all, we're going sideways. We can agree to that. But what happens here? We start shaping our box upward. What was happening here? On a fractal level, we started pushing our box up. What was happening here? Sideways. What was happening here? Box up. What was happening here? Sideways. And once you start to look at the market in this way, in which it consolidates and then expands, consolidates and then expands, consolidates and then expands, that is the premise of what this indicator is built upon. Because if we jump down to the 20-minute and I turn on my indicator, expands, consolidates, expands in the opposite direction, consolidates, expands, consolidates, expands, consolidates, expands, and that's how this works. That's the whole premise of the indicator.
Yeah, I got you. I will definitely, go watch this one like 3 or 2 times at least.
It's
And repeat
powerful.
that. Yeah, I will try to practice that more, maybe, that
Yeah.
would help more. Yeah.
And then if you want, we got a little bit of time left. Like the call doesn't end for a little bit, but we can continue this back test and seeing if there's any other entries for us.
If you're gonna continue, Can I ask you if you can continue doing this, but in Forex?
Yeah, you want me to do some sort of forex pair? The indicator right now I told you isn't optimized for that just because of the contract sizing, so we wouldn't be able to use the indicator, but we can continue some backtest on like Euro USD or something.
Yeah, yeah. I'm sure it's gonna be better because it's not that it's not about the indicator itself, but most of the time when I see someone trading futures, I see most of the charts that are extremely clean.
Yeah.
And when I try to apply this in Forex, it's a real mess.
Okay. So
It's
one
not
very, very
explained.
awesome thing that you're gonna love is that I have all these backtests, and I had a backtest. I don't think I've uploaded yet. Not yet. I'll probably upload it within this next few days. But it was a backtest on Euro USD from 2021. And if I go to my FX replay, I can show you. It was the worst backtest you could ever imagine. And I was on a call with someone else, and we'll go look at the price action on this, and I'll show you what I'm talking about. So jumping here into the daily, this is Euro USD in 2021. Where's 20? I think I did, yeah, 2021. Look at this market condition on the daily. It was the nastiest Forex. This is the daily, by the way. Nothing about this is clean for me, right?
But this is the daily, right? So it's like
This is the daily, and it looks this bad.
yeah, for something like this to to correct itself, it's gonna take maybe at least like 2 or 3 years because it's the daily, or
Yeah.
maybe more, maybe less.
So that's one of my biggest indicators of price action. Look at this. The same thing that we just saw in the, I think it was the 20-minute stage one, or like sideways delivery, and then the thrust. I do not trade price action like this. If I jump onto a daily and I see this, I just walk away. Period. But I'm going to show you what my back tests looked like, what the results looked like. Because what I did is I wanted to really test my system, and I went to find a really, really bad market. And I saw that Euro USD in 2021 and like 2023 was horrible. Like just the worst price action. If I jump up to 2023, if I go here, I did another back test on 2023. I think it was this one. Yeah, it was this one. If I jump up to the price action during this year, I think it was this year. Look at the daily, bro. Chop, chop. Oh, my bad. Chop, 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 chop. Up, down, up, down, up, down, up, down, up. And it only got clear to around this point. I'd classify this as clean, but look at this price action. We're not moving from the MAs. We're just sliding up against them and then falling back down, up, down, up, down. Like at some point, I thought this would turn into distribution and we'd start falling shorts, and then it turned long again. And it's like every few days you were changing direction. Here, you might be following longs, and then you'd switch to shorts, and then like for right here, because keep in mind this is the daily. If you jump down to the 4-hour,
Yeah, exactly.
you're gonna start following longs, and then shorts, and then potential longs, and then like longs again, and then shorts, and it just gets very, very messy. Like here, you're just waiting. This is your sideways box, and you're waiting for this short delivery to begin to follow it long. And I'm gonna show you the results of both of these. These were the results. And somehow, well, not somehow, of course it's gonna end profitable because I've been doing this for a long time, but this is how the results ended. It was very, very questionable price action, but somehow I still ended up 60% on the year
Actually,
on a pretty bad,
yeah,
model.
that's very nice. It's in a year, right?
What was that?
The duration of the backtest.
1 year, yes.
That's very fine.
And then we go to 2021 and we turn off here. I have to go to the old model. There's a bug, so I have to go to Euro USD 2021 analytics, and we'll turn off running P&L. And this is what this looked like. We ended up 66% in one of the worst market conditions. Like if I were to force my system right now on any market, this is how it would perform. But I know that if I wait for a cleaner market condition like NAS in 2024, you're going to get better market conditions where I made 82% in less than half a year. So
Actually,
I'm already
that's very
double the performance
impressive.
of your USD. So
Mhm.
I have a
I think
video.
it's one of the main one of the main things that makes you change to futures. because it's like it's more there are more markets than Forex, while the other Forex pairs they are most likely correlated to each other.
But if you go and
So,
look at Euro USD on the daily, I think it was in 2019 to 2020. Let me go point this
mhm,
out to you because it's not necessarily true. This was 2021 to 2022. Look at this beautiful market condition. We
yeah,
have our long vertical box, and then right here you have your long horizontal box. You're not trading any of this. Then you go to 2019, and once again, you get the beautiful long box, and then you get whatever the hell this is. It's like back and forth, up, down, sideways, falls down. Like you might have caught a lot of this, and then once again, you're sideways. You get a little
mhm.
burst, and then you're sideways again, a little burst, you're sideways. Like it's just not a good market condition. So every market is going to go through these phases. Don't think that, oh, it's just Forex, that's bad. No,
Yeah, I
Forex gets
understand.
really, really good.
It's not that what I really meant. I meant that because of the correlation between forex pairs, if like the two or three main pairs are bad, probably the others will be bad. So this means that if you're really, following the context that starts from the daily, for example, or the weekly or the 3 days, it's gonna take a big time till it becomes clean again. So this
Yeah.
why maybe futures and stocks are much better because it's giving you a big variety of markets that are not really correlated to each other.
Yeah. I could agree with that. Forex, yeah, they're all tied very, very closely because if one changes, other ones have to change to meet that demand or whatever changes they make in the government. And so Forex, the way it works primarily is you have all these governments wanting to control their currency. For example, the US right now might be trying to increase import rates and all sorts of random shit that we don't know about. I studied this a little bit, so I know a little bit about it. But they want to regulate their currency for certain things. So, for example, during the presidential election, which was recently, they might want to hold the currency value within a certain range. This is why support and resistance traders do exceptionally well in Forex. Because in Forex, you're never going to get a currency that just goes, and goes. Because
Yeah,
imagine you just had a currency that went, and went. The US would be the most powerful currency, and then all the other countries would just be poor. And instead, the the US government, the Federal Reserve, will change all these different numbers within the government, interest rates, bank lending percentages, and all sorts of crazy stuff to control this. They have lots of control over currency pairs. Versus Forex, I mean, who would be complaining about gold prices going up, right? These can go on and go on and go on for the reason that they're limited. You have a limited resource. At some point, we're going to run out of that resource and it's just going to skyrocket. Same with Bitcoin. Bitcoin, we have a limited of 21 million Bitcoins in the world. Why would it be reasonable for this thing to just go up the entire time versus Forex? And so Forex systems are actually really good for people that do a lot more of like the back and forth kind of trading. Let's see how my trade's doing. Gonna move this out the way. Step up to the 5-minute. Is this the thing I was trading? Where'd my
I think it was the one you was explaining earlier. It was one of the four, yeah, one of those four, I think.
where'd my thing go? Did I delete it on accident? Damn it.
Uh,
Please tell me I didn't delete it. Oh no, I'm in replay.
um,
Okay, good. I was like, fuck.
yeah,
There we go.
I was just going to say the same thing. Maybe it's on a replay.
There you
So
go.
I
I'm
think,
up $2,000 right now. Just like sitting here
yeah,
talking to you.
yeah, very nice. May I
And
ask you, what do you risk per trade if you want to
what do I
pass a challenge?
risk?
Per trade, yeah, how much percentage?
It's right here. If you look on the bottom right, right now I'm risking 0.5.
Um,
So I'm risking about
yeah,
750 per trade. But this
it's
is
like, yeah, most of the time, I go to a lower or I use a lower risk percentage to make sure that, yeah, I will just not gonna blow this account, but I'm not sure if it's,
It can be
a
good
good
and
idea
bad
or not. One of my friends.
because usually on a live account, I
Yeah.
risk 0.8 when I have a good cushion. But when I'm doing an evaluation account, I simply risk 0.5 or 0.6, at the highest 0.7. Because, like, just take it slow, I don't want to rush things.
Yeah, exactly. It's kind of, but sometimes I feel like, because most of the future prop firms gives you like 6% or less as a maximum drawdown. This way,
On my
it's
prop
kind of
account, right now, my max drawdown is 3%, and it's even lower now. I think I can lose a total of like 3 trades before I lose the account, and I'm okay with
yeah,
that.
exactly. It's kind of scary if you really want to pass it with the first trial, the first account.
Yeah, it can, but I'd rather just take things slow. Like I'm in no rush to become profitable or to like get this
Yeah.
account, because once you get one
Mhm.
account, you can take the rest really slow, and either way you're going to make money regardless. So,
Mhm.
but yeah, if you want,
So,
we
yeah.
can continue some backtests for the last few minutes we have. Oh, well, we only have 2 minutes. But I can walk you through what I'm looking at on NAS right here on this
Yeah, sure.
backtest. It's the same market condition we actually just saw. That's great. The daily's falling off, but our anticipation is this high. We want to see this build out. It's the first time we've crossed over the MAs and we're starting to push up higher. So now what I do is I step down to the 4-hour. 4-hour is
Mhm.
pushing higher. Very nice, which is falling in line with that. Step down to the hourly. Hourly, we're just sideways. This right now would be marked red by the indicator. And then it doesn't help that we have red news. So what I'm going to do is wait for a strong push up. That would turn the indicator green, and then I'm looking for longs. So let's see if we catch anything. Nothing. We do have red news though, and I don't trade red news, so I would just be staying out of this market. Coming in on 12, I don't trade past 12, just given because the market closes. So I just skip to the next day, and this is the next day open. Looking at the 4-hour, what are we doing? We're targeting these highs up here and targeting primarily this high on the 4-hour. So what I'll do right here, jump down to the hourly and wait for the same thing. I'm waiting for money to come into this market. Gonna jump down to the 20 to see what's going on here. It's not choppy, it's not wiki, so that's when I would say good, good, good. Like I just jumped through timeframes. Oh, but we have red news again. Okay, too bad. We missed the move. That was red news. And the market goes, goes, goes. Now, I am allowed to take an entry 1 hour after red news. So what I do is I mark this out. And this is the very first candle on this one right here where I can take an entry. Is this a valid entry?
Yeah.
Not really. It went too far, and we're really far away from the MAs. So I'd just be staying out and wait for some stabilization, that sideways that I tell you about,
Mm-hmm.
and nothing happens. Oh, what time is this? Okay, so it is 11:20. Usually I don't trade past 11, but that's okay. For example purposes, on the 4-hour, we're taking long, so I would say good, good, good. That's your entry, and then 5-minute, whatever low ATR you have here, that would be your low.
Mm-hmm.
And then you just play it out, and you probably take a break even on this low. Yeah, you take a break even trade on this, and then you're just waiting again. This entire thing is marked red by the indicator, and I don't even need to know to see it. And then I'm just waiting for money to come back in. So our call's about to cut out. I don't know if you want to continue this back test with me. One more
So,
call. All right, call cut out. So I'm just gonna pause the recording, and then we'll continue this here in a second. Alrighty guys, so as he joins up the call again, I'm just gonna show you how the trade's playing out. I do have to close the trade by the point we hit this line, just because I don't like to leave trades running overnight, but you can see that in 2 trades, we're almost halfway done with this entire evaluation, this entire challenge, which is cool, I guess, and risking only 0.5%, 2 contracts on this, and we're up $1,500, so doing very well. But yeah, the moment this hits near around here, I usually close it at some sort of high. I could have closed it at this high right here, but of course, you can always like look at the oh, I could have, I should have, but no, that's not how that works. And yeah, we'll just wait for him to hop back in, and then we'll continue diving into this. But yeah, give it a couple minutes, and I'll resume when he joins up. How are you doing,
how you
man? So
I'm fine.
I don't have a whole lot of time. I only got like 10 minutes left because I do have another call. However,
Yeah, yeah, I
why don't
understand.
we continue this back test just so you get the hang of a little bit more what I do and you can ask questions as we go, whatever you want.
Yep.
Yeah.
Yep.
Cool. All right. So gonna jump back up to 4 hour. 4 hour. We're still anticipating this high to get blown through. Hourly.
You're not sharing your screen.
Oh yeah, that's important, isn't it? Let me share my screen here. Let me figure out how to do this. Share. Cool. Actually, let me open up OBS here just so I know we're recording. I'm gonna close this out. Awesome. So let's get back into it. We're gonna dive into Google Chrome. This is how the trade's going, by the way. We're still up $1,500. I'm gonna close it right before 2 p.m. just because I don't like to leave trades running over rollover, and some firms don't allow it. So I just like to close them all regardless. That's just part of my system. So yeah, it's like a 2RR, almost 3RR runner. We're up 3RR actually, so it's not too bad. But yeah, it's been going well. We're almost halfway there to passing this challenge. So in 2 trades too.
It's great.
So
Yeah.
looking at the daily, we have our target. Like we already talked about all this. We talked about our 4-hour target up here and then the daily target beyond that. 4-hour hourly is okay. Hourly right now, I can tell you the indicator on the 20-minute would be looking something like this, and all this is red. Okay. And that's how the indicator can help other people. I don't know. So coming into market close here, I'm just going to skip to the very next market day open. And so we start off on a downtrend. I don't like to see that. I need to see this high get blown through. So now not only do we have a 4-hour target, but now we just built an hourly target. So now I'm just going to wait and this market's going to fall off. And guess, I don't know, but very often news is actually the catalyst that helps us boost up. And so we'll see what this news does. It sets up nicely. It's only 9:20. Yeah, there's some nice longs here. Look at the 4-hour. I always like to go back and forth. 4-hour, we're good, meaning good price action. Hourly, we're okay. We're below the range. So I'm just going to give this market a little bit of time. On the 20-minute, or on the hourly, sorry, we're getting a little bit of this chop that I don't like to see. So I'm just going to wait for the market to prove itself. There's a little bit of uncertainty. Why did we push up super strong and then fall back the same amount? Like something's not adding up. So instead of me trying to force stuff, I just wait. So I'm just going to give this a 20-minute candle and see what it wants to do. There you go. Now you get a little bit more clarity. Looking at the 4-hour clean. Hourly is getting a lot cleaner. We have moved, look at this last candle. Look at the strength in it. That leads me or gives me the conviction that this push is actually going to continue that. So 4-hour good, hourly good, 20-minute good. So now we have a valid 5-minute long over this high. Something like this. Set up your long. Your low is going to be your ATR, which is about 23. So I could set up a 23 ATR stop, risking 0.8% in this case. Yep. And you set up your buy stop, and that's it. You get buy stopped in, probably going to take a loss or break even. But in the case that you don't, I'll probably take a loss here. In the case that you don't, you get a nice little runner. Yeah. Now you're at a break even. I don't care if this loses anymore. I'm not losing money. It's just part of the edge. And now you just give this market time. We're coming in on market close. Generally, if you're trading with a personal account, you're not going to close this trade. But I don't do that for this. I trade it as if it were my own personal account. So there we go. We took a break even though it ran like 2-3 RR. Let me check how this trade's going. Yeah, so on this trade, we're up 1,700. Not bad. So 4-hour, we're good. Hourly, we're good. 20-minute. Now we're going to wait. Now we have a new 20-minute target up here. Look at how we're doing this fractally. But I don't trade past 12 or 11. So I'm just going to skip to the next day. And look at what this price action was. Look at what I just skipped. The worst price action ever, bro. Like, no matter what entry you took in here, it was a loss. So that's why you don't trade past market close. Or I don't. Other people might. But there's clearly no money to support my move. So 4-hour, we're still waiting for this high to clear. Getting a little bit of this sideways action. So this is where you'd want to be a lot more hesitant because you're going to get that sideways action and then you're going to get some sort of propulsion move up. And I'm waiting for this propulsion move up. So looking at the 4-hour, still good. Hourly.
Baseline.
Yeah, that's what we're doing right now. We're baselining, waiting for this giant move. So on the hourly, I'm just waiting for money to come in. Money's starting to come in. 4-hour supporting, hourly supporting. So now I'm going to wait for the 20-minute to baseline. Same thing. I'm waiting for the 20-minute to baseline and then set up. and let's see if we get anything. Okay. Nope. There was a valid buy stop over this high, and then it fell back down. Now we're just waiting again. Now we're getting a lot of chop. I'm not touching this market anymore. A lot of chop. What time is this? 8:40 in the morning. This was probably red news. So you don't trade an hour before, an hour after. Look at this. We're starting to get what could be the start of this push up. Look at this immense strength. It is a little wicky. Let's go look at the 4 hour. The 4 hour is very clean. The hourly is clean. The 20-minute is somewhat clean. Some people might not trade this, but the reason I would trade this is because this is the second strength validation candle that came into this. Most of the strength came in from this candle right here. If this were the only candle that was printed, then I wouldn't take this buy stop. But because we printed a second one that confirmed that validation, now it's like, okay, I'm good for a long. 4 hour good, hourly good, 20-minute good. And now you have your 5-minute long right over this high, just as I painted it. You're going to set up your buy stop right over the high. Your low is going to be 1 ATR, which is about 0.31 or 31. Something like this. And then you're good for a long. You set up your buy. Probably going to take a loss, which I am okay with. Get buy stopped in. Get ready to take your loss. And notice how I'm not even surprised. I'm always anticipating my next loss, and I'm okay with that. So now, what time is it? It is 9 in the morning, so we're still valid to continue looking for longs. So now I'm going to wait for another setup.
It's not chopping around right now because of, if you can, just go one step back to the higher time frame.
Oh, on the hourly?
Yeah, exactly.
I wouldn't consider this chop. Notice how the MAs are reacting. Like chop, you can call this candlestick chop, sure. But what happened on this very candle? We corrected it. And immense strength came into it. Now, if this strength hadn't come in and we're still chopping and we got a setup, something like that, I wouldn't take it. But this immense strength, probably red news, to be frank with you, I don't know, chopped us out. And that's okay. Like
So in this case, you're not really using the range, or I misunderstand this?
You can see this as your range.
Yeah, exactly.
This is my anticipation.
There's no reaction at all.
This is my anticipation. My anticipation is that we're going to continue here. My anticipation back here was that this was our continuation up. And my anticipation,
exactly.
If this falls down and then goes back up, is that this is going to happen. Every time I'm anticipating it. Now you're going to take losses. That's part of, like, you're not always taking wins. It's part of the game.
So you are anticipating as long as price is at the top of that range.
Yeah.
Just because it tried once and failed, and maybe the second time failed.
Now if we fail down back here, like down here, I just stop looking. But as of right now, this is telling me that institutions are buying. You can see this immense amount of buying, and likely this is going to continue. I don't know. It might completely fail, but that's part of the system. So we'll look at I am running out of time, so we'll take a peek here. I'll go a little faster. But now I'm just waiting for an entry. It's 8:40 in the morning, so US open, and now I'm just going to give this market time. Potential long over this high, but I'm not taking it given the wickiness right here. I'm going to wait for another validation candle. 1, 2. Okay, another setup right over this high. Now you can take this one if you want. It's 10 in the morning. You get to choose if you do, and that's your buy stop. You probably take a break even. Actually, no, that's the trade that goes. So notice how by one rule, I didn't take this candle, but I did take this one. Because if it were only this candle, this wickiness and this market condition wouldn't have wanted me to take this trade. I wouldn't have wanted to, because I know that's going to lose more often than not. So if I go back to this candle and I play forward to where I told you I wouldn't take it, look at this market condition. Wicks on both sides, a little bit choppy. But notice how I did want to take a buy stop over this high. It's the same situation. Our first candle was this one, and it was right before a lot of chop. And then our next candle, this one, validated it. Same thing here. Our first candle was strength, but look at this wickiness. Our second candle, 1, 2, was this candle. Lots of strength, moving away from the MAs at the high of the range. This is a candle I would want to take. I jumped down to the 5-minute, set up your buy stop right over the highs. Your low ATR is going to be around 19. So you can make this pretty large to cover the low, and then that's your entry. If it wants to play forward, it seems like it doesn't want to. Weird.
It's 5, I think. I'm not sure. I don't see the data because it's.
Can you see it now?
Yeah.
Can you see my screen?
Yeah, I see it. No, I mean it's not working anymore. It's not passing anymore because it's live, I think.
Okay, so yeah, you're gonna wait for your. Let me move this out the way. You're gonna wait for your
Yeah.
validation. Hang on.
Mhm.
1, 2. That's weird. Okay, well, it completely froze on me. Can you still see my screen though?
Yeah.
Wow.
I can see it.
Seems like it's loading. It might be frozen on their end. Maybe. Yeah, their thing is frozen.
Yeah,
That's so
that's
weird. Yeah, you can see it trying to load. Well, that's great, but you
yeah,
get the
it's
general
it's it's
idea.
fine. It's fine. It's fine.
Currently,
No,
we're
no.
up 1,600, so we're still climbing a little bit. I'm probably gonna close this trade somewhere around this high, for like a $2,000 gain.
Mhm.
Yeah, that's weird. I've never had a problem like this. Let me go to the old version. Maybe that fixes it.
Mhm. By the way, do you have a Discord server maybe that we can talk in
I'm
say a
actually
few
making
minutes?
that tonight. I've had so many people reach out to me asking to make one, so I'm gonna make one. Okay, so it
Yeah.
seems like it loaded now. So I'm gonna wait on the 20-minute. Let's go see our 20-minute candle. Notice how we have this chop, but my anticipation is that this strength is gonna be our move up. So now I'm just gonna play it till the next candle. Okay, well this one's also frozen, it looks like. There we go. So yeah, 20-minute is
Uh,
looking okay. 5-minute long, I had my entry right over this high, my low right here,
mhm.
and then you're just waiting to get buy stopped in. Move to the 1-minute, you get tapped in, you're giving this market time. Move to break even relatively soon, probably right about now, I'd say. Nah, not yet. Probably take a loss here, nothing new. Cool, you move to break even because we broke this high right here. So that's telling me institutions usually, if they're going to uphold their positions, they're not going to want to let go. 70% partial to this low. 70% partial updated to this low. 70% partial. I'm probably going to force the partial a little bit more and move it to this low, somewhere around here.
Mhm.
Okay, we take our 70% partial, close 70% of the position. Now we're waiting. Jump up to the 20-minute to see where we are in the market condition. I'm going to move the rest of my position to probably a here for now. Wait for strength, move it to this low. Holy fuck. Well, there you go. You got a really good trade for this video. Okay, move to this low. We're up, how much are we up? 13,000. Move it to this
It's
low.
it's a very winnable trade actually. Yeah, it's the momentum is very strong.
Move it to this low, this low.
Yeah, so,
Move it to this low. Currently we're up 13R and you get taken out. Brother,
mhm.
it's that simple, but it's very hard. Like it's simple, but it takes a lot of work to get there.
Yeah. So there's two pictures that I have sent to you right now. It's in the chat.
Okay.
It's about it's in queue. It's a daily and 4 hour chart.
Okay. Give me
I
just 1 second because I am going to have to run here. I had to leave a few minutes ago. If you
Yeah,
want,
so maybe we
shoot
can
me a
continue
DM
maybe
or shoot
later.
me a DM and I'll take a look at it. This is how
Yeah,
we
it's
ended this back
um,
test though. That little win
yeah.
right there. We're up.
Mhm.
How far up are we? 100% in almost a year, like 6 months or something. There you go.
Yeah.
We'll do a complete back test together so you can ask me questions and whatnot. Go watch some of the videos where, like, I have one called, this one would help
Which
you quite
one?
a bit. Let me find it real quick.
Yeah.
It was a shitty market condition. I think it was like called the dreaded drawdown or something like that.
It's
Yeah.
like, it's more about how you explain things. So like seeing videos that has a lot of explanation.
Uh-huh.
Tells me a
So
lot.
go
Yeah.
watch this one. It's called the dreaded drawdown, and it just shows what a really bad market condition will do to you. And like
Yeah.
you're gonna see me take every single loss on that video and not a single winner, and you'll understand why my system has just outperformed everything else. It's just because I just don't care about losses, bro. Like I'll take a loss right now. Although, oh shit, we're up 2,000. We're halfway there, bro, to passing the challenge. And this is a small account. This is 150 grand, or relatively small for other people.
But why don't you go to the 50?
To 50K account?
Yeah.
That's so tiny, bro.
No. You just buy as much as you like, and the ratio is less.
Like buy multiple 50K accounts?
Yeah. People do this instead because
Yeah.
listen. The 150K, the ratio between the profit target and the maximum drawdown is like 2.6 or something like this. While the 50K is less than that, so you can just pass it faster and you can buy as much as you like.
I'll have to look into it. I've heard about that, but
Yeah. It's people just do this and pass it very fast, and they just compensate that small accounts by just buying as much as they can.
all right. Yeah, I'll look into it. Watch me. I'm about to go close my trade. We're up $2,050 and closing in 3, 2, 2080. Wait, let it go up 2090. All right. 2100 and 2100, and I'm out for a total profit of so far $4,867 in the last 2 days.
Nice. That's really cool.
Cool,
Nice.
cool. Well, about the Discord real quick. I have to run like right now. About the Discord, I am creating one tonight and I have a lot of people asking me about it, so I'll share that with you once I'm done, okay?
Okay. I will see you in the Discord server then.
Cool. All right, peace out. Bye-bye.
Yeah. See ya. Bye.
All right, guys, I got to run, but there you go. Peace out.